What would it take to wipe out the fortune of one of America's most successful technology billionaires? Michael Dell built Dell from a small computer business into a global technology powerhouse. His wealth has grown through technology, investments, and major ownership stakes. But even a fortune measured in billions is not completely protected from risk. A major market downturn, a heavily leveraged investment, a collapse in asset values, or a chain of financial problems happening at the same time. So, could Michael Dell actually go broke? It's extremely unlikely under normal circumstances. But if several major risks collided at once, the story could look very different. Michael Dell's fortune is not simply sitting in cash. A large portion of billionaire wealth is connected to companies, investments, and other assets. That creates a major vulnerability. If the value of a major investment suddenly fell, Dell could see a huge reduction in his net worth. Imagine a scenario where technology markets suffer a severe downturn. Technology companies lose value. Private investments become harder to sell. Financial markets tighten. And investors suddenly become much more cautious. A billionaire can lose billions on paper without spending a single dollar. That doesn't automatically mean bankruptcy. But if losses become large enough, the pressure can become serious. Another major risk is leverage. Debt can help investors expand rapidly when asset prices are rising. But it can work in the opposite direction when markets fall. If an investment is financed with substantial borrowing, declining asset values can create pressure to provide additional capital or sell assets. And selling during a market downturn can lock in enormous losses. For someone with a huge financial portfolio, leverage can turn a manageable decline into a much larger financial problem. The danger isn't simply losing money. It's losing money while obligations still have to be paid. Michael Dell's career is deeply connected to the technology industry. And technology has always been one of the most dynamic and unpredictable sectors in the American economy. A major technological shift could disrupt established businesses. Competition could intensify. Demand could weaken. And valuations could fall sharply. Now imagine several of those factors happening together. A technology slowdown could reduce the value of multiple investments at the same time. That creates what economists call correlation risk. Instead of one asset falling, several assets fall together. For a billionaire with significant exposure to technology and related investments, that could be extremely painful. Dell Technologies operates in a fiercely competitive global industry. Companies constantly compete over computers, servers, cloud infrastructure, enterprise technology, artificial intelligence, and data centers. Technology changes incredibly quickly. A product that dominates today can become less important tomorrow. If Dell Technologies experienced a prolonged period of weak demand, shrinking margins, or intense competition, its market value could suffer. And because Michael Dell has a significant connection to the company, a major decline could affect his personal wealth. This is an important distinction. A falling company valuation does not mean Michael Dell personally goes bankrupt, but it could significantly reduce his fortune. This is where the hypothetical becomes truly dramatic. Imagine a severe economic downturn. Technology stocks fall. Private investments lose value. Credit becomes expensive. Debt becomes harder to refinance. Major companies reduce spending. And investors begin selling risky assets. Now add another problem. A large investment requires additional capital at exactly the moment when markets are under pressure. That combination could create a financial chain reaction. Assets lose value. Liquidity becomes more important. Debt obligations remain. And selling valuable assets during a downturn could create even larger losses. This is the kind of scenario that can transform a financial setback into a serious crisis. Technically, almost anyone with enough financial exposure can face bankruptcy under an extreme set of circumstances. But for Michael Dell, that would require something far beyond an ordinary market crash. His wealth, business interests, and investments provide multiple layers of financial protection. And unlike someone whose entire fortune depends on one paycheck or one company, a billionaire typically has access to a much broader financial network. So the more realistic scenario isn't Michael Dell suddenly having nothing. It would be a dramatic destruction of wealth. A fortune worth tens of billions could potentially become a fraction of its previous value during an extreme financial crisis. Michael Dell's story is a reminder of one important fact about extreme wealth. Billions of dollars do not eliminate financial risk. They simply change the scale of the risk. A technology downturn. A major investment failure. excessive leverage, and a severe economic recession happening at the same time could create an extraordinary financial challenge. Would that be enough to make Michael Dell go broke? Under realistic circumstances, probably not. But if multiple worst-case scenarios collided at once, the billionaire's fortune could face a historic test. And that's the real question. How much financial pressure can even a fortune worth billions survive?